Great, Andrew. Our guest host this morning is legendary short seller Jim Chanos, founder and president of Kinnikos Associates. He's also an advisory board member of CNBC's Institutional Investors Delivering Alpha Conference and a visiting professor at the Yale School of Management. Mr. Chanos. See, you were worried. You were worried I was going to say Mr. Shorty. Nobody wants to be called Mr. Shorty. I don't care.
Not in this market.
Right, and I don't care. Not in this market. Well, I was being, sophomoric again. But anyway, I couldn't help think of you. And actually, I got a heads up. I knew that the China thing was coming on 60 Minutes. And in 60 Minutes, there's a time and place for 60 Minutes. Sometimes I have a problem with some of the business interviews that are done. I think they're, they could use a little background from us maybe, but or from CNBC. But this was a pretty good piece. There was a two-part piece that Leslie Stahl did on China. The first one, I was amazed at the architectural designs that they're putting up. Are there businesses filling up those companies in the first part? The corporate companies? I know residential is a problem, but do they have tenants for the beautiful I am paid type buildings?
Well, good morning. I'm not sure about Soho, which was the company that they were profiling.
The 47-year-old lady that was a Wall Street.
In fact, I thought her commentary on politics was actually more interesting than the thing about her company.
Right.
Talking about everybody wants democracy, which is sort of an interesting thing to say in China. But there's just no doubt that this thing is just getting bigger and bigger and bigger. We talked off camera.
Well, let's talk about the second part of the city, and you think city, and I was thinking like, when you drive across country and you see some of these towns, that's not the kind of cities that we're talking about. There are gleaming, they almost look like Manhattan type cities that dozens that are honestly, all those buildings are empty.
Yeah, pretty much. Yeah.
And you build them, they're sold to people because there's billions of people that can't invest anywhere else. Is that it? They can't invest in outside. They can't buy
Well,
US
it's not
stock.
Billions. That's the interesting thing. It's a very small number of people that can afford these apartments, and
but no one can afford to live in the apartment. They can afford to buy them, right? But then no one can afford to live in them.
Remember, also they buy them empty. They buy them literally as shells in China. So there's no, internal walls or appliances or anything like that. Yeah. So they're really sold as sort of boxes. And the other interesting thing is when I talk to my friends in China who actually own some of these things, and I ask them, well, do you know what happens to empty real estate? And in terms of vacant real estate? And I sort of get a blank stare. The other interesting thing in terms of ownership is, of course, that there's no maintenance fees. There's no homeowners association. So what happens when the elevator goes out?
Nothing.
There's no one
who pays for that.
But it doesn't matter. It's a tree falling in an empty floor.
Well, I guess. Yeah, exactly, to my point.
No one riding the elevator.
But, I mean, there's literally no thought given to sort of actually living in these things and dealing with ongoing costs.
Okay, how much in residential this is going to be an impossible question to answer. How much is the government in for in overbuilt residential real estate?
3 years ago, when we started talking about this on Squawk, the Chinese Statistical Agency said there was 5.6 billion square meters of both residential and commercial under development. That's all been built, by the way. And at the time, I said, well, half of that was commercial, and I did some numbers, and it was 30 billion square feet, and that equaled a 5 by 5 foot office cubicle for every man, woman, and child in China. That was 3 years ago.
What was it? What do you think the value to put on the square foot was?
Well, I mean, residential, we use a value of about $60, $70 a square foot.
That's all?
That's all. That's a construction.
You build a house here like that?
No, not well.
300 or 400.
Yeah.
All right. So what is that? Does that come to trillions?
Well, now my point is now the same statistical agency, and we always have to take numbers with a little bit of a grain of salt. The same agency is saying it's 10.6 billion square meters under development, almost twice as much 3 years later.
Oh my God!
So if you thought it was bad 3 years ago, and I did,
occupied.
They're building twice as much as of right now.
Is it safe to say the government's in for trillions of dollars of bad loans?
Absolutely. Construction is half GDP, and GDP is about $8 billion US. So investment in China right now is annually about $4 trillion.
The government says they're going to get growth of 7.5% this year. How do they do that?
Well, because the government says that they're going to get 7.5%, they're going to get 7.5%.
At some point, does it catch up?
Well, I mean, again, it's the nature of the growth. If it's all sticking a shovel in the ground, you get whatever you want. Mm-hmm. But at the end of the day, what's sustainable? Because as I keep pointing out, every time you finish a building under this model, you got to put up another one.
Right.
It's not as if it's consumers buying goods and services.
You know, everything in China is hard for Westerners to understand. Obviously, it's inscrutable. But how does this, if it's trillions of dollars, it's probably money that government's not going to get back. It's bad loans. How does that finally rectify? Can a state-owned enterprise manage that situation, or does it? It sounds like it's bigger than our housing, or could eventually be bigger than our housing.
Well, here's an interesting point. A lot of the bulls will say, well, it's not so bad because the average buyer is not as leveraged as our buyers were in the U.S. They're paying cash, or they're only putting half down. The problem with that is there is some minority of buyers who are using generational wealth to sort of stretch to buy these apartments.
And that can go to money heaven, can't it?
Well, exactly. And unlike our buyers who walked away and left it to the banking system and the Fed to sort of bail out, these people are going to lose their life savings. And that could be a big issue in China.
Wow.
Well, I just wonder, we're doing well over here now. The housing's coming back. And we're a much bigger economy than China, and we don't need them for everything. I mean, it's nice that we have them.
We're twice as big, yeah.
Yeah, but could it? I mean, this seems like it could impact the entire globe.
Well, I mean,
if it were to implode, but maybe it doesn't. Things like that don't happen in China. They don't implode all at once. You just sort of work it out over a 10-year period.
I mean, China is about a point, maybe a little bit less of global growth. So, you know, if China were to really seriously slow down, and keep in mind, last year we had 7.8% growth, and corporate profitability of there imploded. I mean, so, you know, the question is, how profitable is this growth? And I think that you have to understand that the people that sell into China, commodity makers and iron ore and that sort of thing, they're going to feel it.
Are you? Is that where?
There's also companies like the equipment makers. I mean, if you look at Caterpillar or anybody down the road who.
Yeah, what you're doing.
And look at anybody selling heavy construction or construction related.
Are you short those stocks?
We're short pretty much anything affected in that. Yeah.
You are.
Yeah.
So that's what you're doing for is that a large part of?
I mean, you know, in terms of looking at short ideas right now in the globe, I mean, basically we've made a lot of money in the past almost 30 years now in being short anything that was leveraged using a lot of credit where the asset did not throw off enough cash to support the debt. There's one place where that's happening right now in the globe, and that's China. I mean, none of these assets can support the debt being incurred to take them. And so all the knock-on effects, construction equipment, cement, steel, iron ore, are going to have a rough go of it, I think, when this all subsides.
Jim, you've been skeptical about China for a long time.
Yep.
This is a new short position, though, where you extrapolated it out to everybody who's selling into China.
Yeah, we've been short the construction guys now for a little bit, and iron ore and that sort of stuff. So we've been public on these companies. I think that this is not sustainable. And we've sort of updated our recent presentation and basically said, you know, bigger treadmill, same destination. And that's really where it's going. It's problematic.
There are test patterns all across China now on CNBC Asia. Everybody was watching it, and they're like adjusting their set, and it's like, wow, that was getting interesting. What? They're shaking their televisions. Really, that's terrible stuff.